Committee will come to order. Today's hearing is entitled, "Has Dodd-Frank Ended Too Big to Fail?" This is the Special Inspector General for TARP, Mr. Borofsky's last day on the job, and he's had an eventful 2.5 years. It's probably felt like a lifetime, and we certainly appreciate your service, and we appreciate you being here on your final day on the job. But as has been tradition for our subcommittee, we begin by reading the Oversight and Government Reform Committee's mission statement. We exist to secure two fundamental principles. First, America has a right to know that the money Washington takes from them is well spent. And second, Americans deserve an efficient, effective government that works for them. Our duty on the Oversight and Government Reform Committee is to protect these rights. Our solemn responsibility is to hold government accountable to taxpayers, because taxpayers have a right to know what they get from their government. We will work tirelessly in partnership with citizen watchdogs to deliver the facts to the American people and bring genuine reform to the Federal bureaucracy. This is the mission statement of the Oversight and Government Reform Committee. It's also very similar to the mission statement of Inspector Generals across our government. Today's hearing will explore whether our largest financial institutions will start. I'll start by giving an opening statement, so we'll start the time now. Today's hearing will explore whether our largest financial institutions are still too big to fail, despite passage of the Dodd-Frank Act and subsequent financial regulations. Specifically, we're concerned about the ongoing perception that government bailouts remain an option for poorly managed financial firms. The bottom line is, at 2,300 pages, or over that, Dodd-Frank was supposed to end too big to fail. As it turns out, Dodd-Frank has only reinforced the bailout culture, perpetuated the moral hazard of government intervention, and tipped the economic scales for a few at the expense of growth and competition. In his January 2011 quarterly report to Congress, the Special Inspector General for TARP, Mr. Borofsky, outlined his concerns with a lasting legacy of too big to fail. This report detailed the unfair competitive advantage of certain financial institutions with implicit government support. Through inflated credit ratings and greater access to cheap credit, these institutions receive benefits that crowd out their smaller competitors. Those findings were backed up by data from the FDIC, which found the large financial institutions paid 78 basis points less to borrow funds than their smaller rivals. This point was not lost on credit rating agencies, who now take implicit government backing into account when rating credit worthiness. This funding advantage is the result of the market perception that certain institutions are just simply too big to fail. Dodd-Frank codifies open-ended ad hoc deal-making, like we saw in the financial crisis of 2008. And if that was not enough, Secretary Geithner stated to the Special Inspector General in December 2010 that in the future we may have to do exceptional things again. And he said this well after the passage of Dodd-Frank. The combination of an implicit government guarantee and cheap money only reinforces the moral hazard that Dodd-Frank failed to eliminate. Instead of taking bailouts off the table, the Federal Government has given large institutions a special preferred status. Last November, voters delivered a very loud message to Washington. They don't want their hard-earned tax dollars going to any more bailouts. The American taxpayer does not want their government in the business of picking winners and losers. We need to create a competitive lending environment where small businesses can gain access to capital and thrive, where they can feel confident in the credit markets and start creating jobs again. By recognizing our government's ongoing willingness to bail out large institutions, we can begin to have an honest conversation about ending too big to fail. I'm interested to hear what our first panel and second panel have to say about this matter. On the first panel, we're going to have the Special Inspector General for TARP. On the second panel, we'll have a representative from Treasury, Mr. Massad, who is the acting Undersecretary for Financial Stability. With that,